This week on the Retirement Quick Tips podcast, I'm talking about how to minimize your own personal stock market risk in your own portfolio. And today I'm talking about something I touched on yesterday, which is managing your stock market risk with proper diversification. We need to start here because you might have a great overall balance of stocks and bonds. In fact, if you're close to retirement, I think 60% in stocks and 40% in bonds with a little bit in cash also mixed in there, money market, is a really nice baseline. Now, that's not going to be appropriate for everybody, obviously, but I think that's a good place to start. On the surface, you might look at that allocation and think, I'm golden, I'm exactly where I need to be. But what if 75% of your stock market portfolio is in a couple of different industries or sectors? Or even worse, what if you have just like 1, 2, or 3 stocks that make up the vast majority of your stock portfolio? Well, Houston, we have a problem. You are not diversified. It might look like it, but when you look under the hood, you do not want these big, large concentrations where the bulk of your stock portfolio is in a handful of companies, or worse, maybe just like 1 or 2. So that's why we need to focus on diversification first. That's where I see people can get burned the most. They might have 60, 70% of their portfolio in one stock, or maybe half of their portfolios all in one sector or industry. That's a problem. We need to minimize that. So it's much better to have like too much in stocks or too much in bonds and be well diversified within your stock and bond portfolios compared to a heavily concentrated portfolio where that risk reward trade-off is a lot more amplified. And so you want to look first at, do you have any concentrations? How much of your portfolio, what is the largest stock in your portfolio, and what percentage does it make up of your overall portfolio? Any single stock that's over 10 to 15% of your portfolio, you need to look seriously at and make a plan for how to reduce that. Especially as you get close to retirement, we don't want more than 10% of your portfolio in any one stock. If that stock continues to do great, you own 10% of your portfolios in that stock. But if it takes a nosedive, you didn't have this huge overconcentration. It's going to hurt, but it's not going to hurt as much. So we want to be really careful about that, because even if you have a quote diversified, I'm using air quotes here, diversified portfolio in the S&P 500, you would be shocked to see that just a handful of companies are driving most of the concentrations in the S&P 500 and driving most of the performance. In the last few years, that concentration has helped performance, but that's not always going to be the case. And we don't want to be caught in over concentrations of stocks or specific industries when the music stops. We've been relatively well insulated from any major downturn in the last few years. I realized 2022 was a painful year when the Fed started raising interest rates, but it came roaring back in 2023 and 2024. And so it wasn't really that painful. It only took a year or so to get back to your portfolio hitting all new highs. And then in 2022, we had a big drop in the stock market, but that was very short-lived. It lasted a few weeks. And then by the summer of 2020, stock market's hitting new highs again. And prior to that, it was really like 08, 09 when, the last time we had a huge market correction. So we have to start with diversification, making sure not too much of your portfolio is in any one stock, not too much is in any one particular industry. Look there first. I do have something I've offered in the past for free. It's called Under the Hood Portfolio Analysis. If you send me a list of your positions or the holdings that you have in your portfolio, if you're not sure, you're like, I have this mutual fund, or I have this handful of mutual funds or index funds, and I don't actually know what the underlying investments and holdings are there. So if you want to do that check under the hood, you can do that for free. Just send me an email at ashleym@truenorthra.com, and I'll send you some instructions on how to get the under the hood portfolio analysis. Super valuable. It's free, no strings attached. So if you want to do that, let me know. Again, it's ashleym@truenorthra.com. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.